Let's just say, on average, both companies spending roughly the same amount in capital expenditure over the last decade. The return that TSMC has been able to get on that invested capital, it's not even close. Intel in a distant second place.
Semiconductor manufacturing giant TSMC, Taiwan Semiconductor Manufacturing, has just reported. And so we are going to take you behind the scenes of their financials and make this super exciting for you.
Actually, there was some intrigue yesterday, though, right? This is not a breaking news channel, so there's probably no surprise whatsoever when we share this chart with you. There was a big sell-off in big tech yesterday, especially semiconductors. First of all, two things. Small caps are holding up well because the Federal Reserve might finally be ready to cut interest rates, which is be a very welcome thing for smaller businesses. Elevated interest rates only help big corporations, especially big tech. But Casey, what is going on with semiconductors? Why did they take such a big hit?
There's two reasons for this. The first is that the current administration was discussing possibly adding more sanctions against sending some of this manufacturing equipment to China. We talk a lot about manufacturing equipment companies here on Chipstock Investor, and it's very well known that sales to China make up a big part of the revenue for these companies. The second factor that had the market worried yesterday was the potential competitor to the current administration was making some statements that Taiwan needed to pay for its own defense. The United States would not be interested in defending Taiwan because so much of the semiconductor manufacturing takes place in Taiwan, which they view as a competitor to the United States. So those two factors certainly had the market in a bit of a tizzy yesterday.
Yeah, we're not political commentators, so sorry to bog you down with more stuff regarding that. You probably get enough of that already from other places, but if you're looking for a catalyst for yesterday's sell-off, that's the reason why. Zoom out though, the semiconductor industry, as measured by iShares Semiconductor ETF SOXX, or if you want to use the VanEck Semiconductor ETF SMH, whatever, that's fine too. White hot this year. Zoom out, folks. I don't know how else to put it other than this. Pullbacks are normal and healthy, especially when you have this kind of half-year growth. Chill out and look at the big picture. Let's talk about TSMC in light of what's actually happening in semiconductor industry.
Before we jump into that, this episode is sponsored by our friends at public.com. Are you dissatisfied with your savings account? Check out public.com.
Public.com has just launched its new high-yield cash account, offering an industry-leading 5.1% APY. There are no fees, no subscriptions, no minimums or maximums, just 5.1 interest on your cash. You can transfer or withdraw cash as often as you like, and you get up to $5 million in FDIC insurance. Grow your cash at an industry-leading 5.1% APY with a high-yield cash account at Public. Go to public.com to learn more.
Okay, we're back. Thank you for watching our very first sponsored video. We're very excited to have some help with that. Let's talk about market segmentation and TSMC. Taiwan Semiconductor Manufacturing makes the most leading edge chips available now. And so they have been heavily involved in this top part of the market, AI infrastructure, which is in all out max growth. They have also historically played in these other segments, consumer, which is PC, and smartphone. That has been a large portion of Taiwan Semi's growth story, as well as cloud and enterprise, and even some auto and industrial as well.
So the growth story, if we can maybe tee this up, is being driven by that AI infrastructure right now. Smartphone in a little bit of a seasonal downturn, expected to post some significant growth the second half of this year. So starting in Q3 and into Q4. And in particular with that AI, we put this chart together the beginning of last year, early 2023. TSMC is ramping up its most advanced 3 nanometer manufacturing technology that is now making up a significant portion of its business. In fact, our initial guide last year was way too conservative. In the first quarter of 2024, 3 nanometer, the most advanced, production ready manufacturing process was at 9% of revenue. And of course, much of that driven by, like you said, Casey, HPC, high performance computing. That's the AI infrastructure and the cloud and enterprise, more traditional segments of HPC, as well as the smartphone part of the business. But now jump to the second quarter, and you can see 3 nanometer has now accounted for 15% of revenue. And you can see the HPC portion of the pie, 52% of total revenue in Q2. And this story being driven by AI, or more broadly, more generally, more importantly, I should add, accelerated computing infrastructure, not just AI, but just very high performance chips that operate in the cloud or in a large organization's IT infrastructure.
In Q2, TSMC reported a nearly 33% year-over-year growth rate in their revenue to nearly 21 billion US dollars. You can see the net revenue it reported in new Taiwanese dollars is at 40% year-over-year growth rate. And the reason you see that discrepancy is because the US dollar is actually stronger this year than it was last year.
By now, you've probably seen those numbers. The internet has been absolutely plastered with high-level numbers from TSMC's financial report. Let's just take a look at the balance sheet here headed into this Q2 report. This is absolutely incredible. Chart we put together from our friends over at FinChat. See the link below if you want 15% off of your own subscription to FinChat. But you see the balance sheet doubling in the last 3 years. Of course, so has debt, but net cash and short-term investments over and above debt. Absolutely incredible. This is an incredibly deep-pocketed, incredibly powerful business, industrial capitalist apex predator, let's call it. Of course, over the decades, getting some help from the Taiwanese government, but capital allocators at their finest. And quarter over quarter, another sizable jump in those cash and equivalents. I think if you've been watching us for a while now, we've been saying unabashedly, Intel is not going to just simply catch up to Taiwan Semi by just upping its spending on capital expenditures. Usually, some sort of external factor has to happen for there to be a large change in fortunes for these companies, like something like a big technology inflection point. That technology inflection point is accelerated computing infrastructure, and TSMC owns all of those client relationships, at least the meaningful ones at this point. Even Intel itself still outsourcing a fair amount of its high-end wafer production to TSMC.
TSMC is not slowing down either. If you look at their third quarter revenue guidance, you can see that they plan on a 10 to 15% quarter over quarter increase. Also, the operating profit margin between 42.5 and 44.5%, which would be up to 2 percentage points quarter over quarter increase.
Let's circle back to the primary risk for TSMC. It's a geopolitical hotbed. As powerful as this company is, you don't turn a ship this big in a new direction that quickly. Most of the manufacturing is still in Taiwan, especially the highest end manufacturing. This is another chart we put together last year. What is TSMC doing right now, Casey, to help address some of these geopolitical issues that are going on?
Taiwan Semi has been partnering with other nations, including the US, Europe, and Japan, to build new fabrication plants in these countries in order to diversify their semiconductor production outside of Taiwan and into some international countries. Because of this plan, capital expenditures have gone up significantly, but help us see how that compares to Intel.
Yeah, let's basically call it even over the last decade. There's years where Intel shells out a bit more in CapEx. You can see that in orange. And then there's quarters where TSMC shells out more in capital expenditures. You can see them in blue. So let's call it a wash. Both companies spending a lot to build those new fabs and then purchase the capital equipment, the manufacturing equipment to fill those fabs up from companies like ASML, Applied Materials, and the other Fab 5, and all the smaller companies that provide that equipment too. But pair this chart with the next one. This is where things get really shocking. So let's just say On average, both companies spending roughly the same amount in capital expenditure over the last decade. The return that TSMC has been able to get on that invested capital, it's not even close. Intel in a distant second place. And yeah, Intel is in the midst of a rebound right now. We'll see what they report for their Q2 here in a couple of weeks. But unfortunately, as this new AI infrastructure party gets going, Intel is largely missing out on that. So these lines are not about to converge anytime soon.
I think at the beginning of this year, we called TSMC a bonus pick for chip stock investor. We have not personally invested in TSMC at this point. Is it a good time to start investing in TSM, or are we still going to call it good where we are with our portfolio?
We have plenty of semiconductor stocks personally in our portfolio, many of them customers of TSMC. So adding another semiconductor stock to our portfolio at this point doesn't do a lot for us in the way of diversification. So that's really the only reason why we haven't bought. This is still a wonderful company, a wonderful investment, in spite of those, frankly, concerning geopolitical risks. Certainly something worth monitoring very closely. But we address this all the time, Casey, both in the comments and here in the videos when we cover it, because we understand the concerns with what happens if Taiwan gets invaded by China, the trade war between China and the United States, and Taiwan Semi-Manufacturing getting stuck in the middle of that frequently, all valid concerns. The reason why we would say this is still an okay investment and really a fantastic growth investment for the long term is, should TSMC get taken down some way, somehow, in the small probability that were to happen, the world has a lot more to worry about than just what happened to my TSM stock, should that event take place. Hopefully that makes sense. Thought it was worth bringing that topic up again and reminding everyone that's our viewpoint on it.
Yeah, TSMC is certainly a foundational business in the semiconductor industry.
And at least in our estimation, probably the next $1 trillion market cap tech giant and semiconductor giant.
Stay tuned. Make sure you check out our Semiconductor Insider. We have lots more over on our Discord channel, exclusives, live Q&As, discussion with a great community of investors, as well as all of our video notes and published manuals. Check that out, just $5 a month. Link is in the description below. We'll see you again very soon. We have many more earnings coming your way here at Chip Stock Investor.